Joining us with this week's Ag Week Market Extra is Luke Swenson. And Luke, let's talk about the grain trade, first of all, with soybeans. We've kind of turned the short-term technicals higher here. That market really feels like it wants to rally despite some of these negative trade headlines that we've had.
Yeah, as much as we continue to throw at it, the story we've been talking about for months hasn't changed. Like as we go along, you've put a $65 a ton premium in Brazilian soybeans, which basically negates anything in the tariff. And then any other country, EU, wherever you are, Mexico, it just makes more sense to buy the U.S. because you got a discounted product. So since day one, we haven't really been worried that you're going to destroy demand. You're just going to readjust trade routes, and the market's already shown that, only 2 months in. So the market's really starting to react and build some premium back in on that front that, as much as the rhetoric is getting a little ugly as we're adding to some tariffs along the way, there's not, China's not turning off buying. They can't. Other places that aren't getting all their needs filled from Brazil or Argentina, they're going to come to the U.S. because we're the other exporter and we're quality, and they're going to keep seeing that. And we have yield, so they're going to keep buying it. So we're not overly concerned. The market's starting to show the premium shift. Everyone's starting to build in a little bit of optimism and, name the funds that want to be short grain now that aren't already short.
And we've hit a 38% retracement level now?
Monday we did. Tuesday I think we pulled back a little bit off of it, and then we just got to, as we finish out the week, we'll see if we can get a weekly close on it. And then from that point, technically that should push out some more shorts if we can get that on Friday afternoon. We're not there yet, but technically we're trying to break some of these longer term trends that we've pushed in the last couple months to really beat this thing down. We're bouncing up against some of those resistant levels in all three grains.
And corn is actually retraced, 50%, is that right? Or close
yes,
to
bouncing right in there, and that's, you can feel a little bit of optimism in the corn market. We're still talking record yields, but the demand side on that one, it's, our ending stocks picture across the globe is shrinking massively, pushing 15-20% on record yields in decent yields in South America, record yields up north. If we shrink those things off at all of a sudden, we're not very far from looking at 2012 levels. We're not saying $8 corn, but you don't need to be sub $4. You get a little bit of optimism and you're going to see that thing bump right back through $4, we think.
Corn and soybeans, both, August is going to be critical for weather. So that's what we're going to be trading here for the next few weeks, right?
Yep. Starting the week, everyone was watching pushing 100-degree forecasts into next week. As we push into the weekend, it softened up a bit. You've got a lot of those that have gone away. We told our guys Monday morning, they were looking at the heat index map for next week, and you were seeing places like Winnipeg that were 105. That's not common, and those crops aren't used to that. So you're going to be forcing a little bit of maturity. But they've really dwindled it off. If we're going to have a weather scare, it's probably going to need to be before about the 15th of August because we have pushed a week and a half or two out of this crop. So, the end of August probably isn't going to be as important as it is most years. So people looking for that optimism in the market probably want to see it earlier rather than later this year in August.
The other thing corn and soybeans are going to be eyeing is this report from USD, which comes out on the 10th.
Yep.
And right now, we are looking at some of the early estimates with a little bit bigger yield, right?
Yeah, earlier in the year, this is the first report they're really going to change it up. There was some guessing, are they going to adjust it early July? They really don't take their foot off base till you're farther along. And early July, a lot of us were actually saying we're probably trading about a 180 corn crop. Beans, you could have flipped a coin. Was it 50 or 55? And beans have kind of stayed the same around that 52. I think you said one analyst is 51.5. Corn, we said in June, kind of everyone was saying we're trading about pushing a 180 because it just looked great everywhere.
And now we're kind of backing off a little.
And that's backing off. And that's the question is, what's this grain fill stage going to look like? It's going to make that a little harder. We've got customers, problem areas in Kansas City, Missouri area, pushing into Kansas, up into Iowa that are hurting, southern Minnesota, northern Iowa. You've got some high yielding areas that have some decent problem areas that haven't let off. And then you cut into that, we push through news to our guys. If you looked at the averages, June and July for Des Moines, Iowa, center of Iowa, 4.5 inches is about your average for each month. In June, I think they pushed about 10 inches. In July, they were 0.4 of an inch, of which a quarter of that was July 1st. So how long can you push that crop without getting good moisture on it? Even if you take away some of that heat, a lot of those guys out there are telling us they need a drink daily. There's a lot of farmers asking for it.
The other thing a little bit more favorable for corn and soybeans is the fact that the funds are still pretty short and don't want to necessarily go much shorter here.
Yeah, and we're excited about that because it's the thing of everyone's piled onto the short side. And as we saw on Monday, just a little bit of chatter sent beans up 3%, corn up a couple percent. And when this thing turns and we actually get something built, which we think is going to happen, you're going to see a lot of people pushing through a little door quick. So it'll adjust itself and it'll overreact like all markets do. So you look at the premium, you can see there's not really a lot of people willing to step back in. So we're content kind of to sit on our hedges other than adding some stops in wheat and let this thing work a little bit and see where we come out the other side.
Corn's been getting help from the wheat market, and wheat's still trading a lot of these global concerns, isn't it?
Yes, you're basically across the board in Europe, Black Sea all the way over to France. You're reducing estimates. There's every other day you're seeing a reduction of 1 million tons here, 1 million tons there. And this is in a period when we're already expecting, 30, 40 year tight ending stocks levels in spring wheat and some of these niche wheat markets. That's really going to compound going forward. People are worried about Russia shutting down exports as you get into this winter, and then you kind of get into the coin flip too of if we don't have a trade deal, maybe we're trying to push all 3 grains through a port at one time, and that might slow up our exports in the long run, but I don't think the market will pay much attention to that as much as the physical grain traders are going to need to deal with it.
So how long can we trade the European news? Well, Australia's had a few problems, so has Canada, but long can we trade the global concerns, and how long will that push the market and how high?
I think you get a couple more weeks into it and that's it. You're seeing some of the ramifications of the wheat tour here, building a little bit of optimism in as well. But as we're finishing out that crop, it's just like any other short year. Whether the crop's there or not, or if it's worse, that news is going to be pushed out by the end of harvest for the most part. And that's what we're kind of expecting and why we're telling guys, be careful, watch this and protect some stops in place if you want to protect some of this price in case harvest calms down.
You mentioned the wheat tour, so I have to ask you, disconnect between the wheat tour, what we have for crop ratings, and what we see coming out of the field for the early harvest results. Why the big disconnect?
And we've had a lot of banter on that for years. It's, how are the USDA's weekly reports actually being taken? And that's a lot of ones that people can't agree on. They say, different county reporters, as one retires and the next one comes in, he'll just talk to a couple farmers and, 3 out of 4 said it's excellent. Well, it's 75% good to excellent. And that's, we're laughing, was it 87% good to excellent for North Dakota for spring wheat, yet our spring wheat tour is coming in 4 bushels below our 5-year average with a drought here in the middle of it. So we were starting to see it about 2 weeks ago. Farmers were telling us, it's not quite record. We're tempering a little bit of our expectations. So I think we can kind of believe it for the most part. It's not 48 like people were expecting for North Dakota. There's still some good stuff out there, but it's not going to be pushing, we're not going to be hearing 100 bushel yield numbers like we were last year in a lot of places.
Let's switch over to the cattle market. We've been in this trading range. We get up to the top end. We can't seem to break out. Is it likely we will, especially since we're starting to go into maybe a little bit weaker demand time period?
You're starting to see the disconnect. Last week I think we were $4 under the October when we were going into cash market. This week bids are running right around unchanged. There's banter up $2, down $2. We're not expecting a lot of change. They're bidding a few weeks out. They've got what they need. We're not expecting the cash market to stay very strong in the long run. Futures, seasonally though, you're going to see a little bit of disconnect here. So we wouldn't be expecting to see it break through the trend unless there's some big demand news that comes out. And that, unfortunately, we're stuck riding the coin flip of what's going to come out of China and other trade news on the demand side, which affects feed and ending stocks as we got droughts. If we get any deal, you should probably see it rallying because they're going to be trying to secure feed as well and manage that side.
Hogs have been obviously pricing in the trade situation, but also big fourth quarter numbers. And some of that is being done through the spreads, isn't it?
Yes, and when we talk, a few of our Iowa guys, debate on where this thing's going to be. A lot of them have just put hedges on, and they said we're just going to deal with this when it works out because they think it could get a little ugly yet still. There was a lot of optimism in this thing going into the summer, and then it tipped over. The hog market is the one where you can build a demand or you can build a production base a lot faster than any other livestock, and we've seen that. It's barns going up left and right all over the place. A few of our guys, they're expecting some of this 90s very, very low hog price numbers, and that they're going to flush some of the system out and run just like we did in the grain market in 2013-14. Big numbers breed production, and then you solve it on the backside. And they're starting to see that come through as well.
If we get a deal with Mexico on NAFTA, which has been talked about at the end of August, how much could that help rebound that market, though?
It can, but it's still going to be the one of, on the corn side, like when you look at 2012, we did everything we could to ramp up production, and we've already, we're already kind of ahead of that curve of getting a deal done. Not getting one done is going to keep us tempered down. If we get one done, I think it bounces us back, 10, 15 in the long run, but we still have got a big production base we've added on, and we're going to need to find some more demands for it. So it'll help, but it's not going to be, Christmas morning, I don't think.
Okay. Good to see you. Thanks for joining us. Luke Swenson with this week's Ag Week Market Extra.